Welcome to the Bloomberg Markets Podcast. I'm Paul Sweeney, alongside my co-host, Matt Miller.
Every business day, we bring you interviews from CEOs, market pros, and Bloomberg experts, along with essential market-moving news.
Find the Bloomberg Markets Podcast on Apple Podcasts or wherever you listen to podcasts and at Bloomberg.com/podcast. Talk about the global energy. We've been calling out the price of WTI crude oil, for the last several months as it's moved off of its low, and he's now up another 1.4% today for WTI crude, just under $93 a barrel. And it's getting a lot of people, as it does, when we see big moves, talking about alternatives to oil. One of those is nuclear. Seth Grae joins us. He's a president and chief executive officer of Lightbridge Corporation. That's a NASDAQ traded company. LTBR is a ticker to put in there. Seth, thanks so much for joining us here in our Bloomberg Interactive Broker studio. What is Lightbridge Corporation? What do you guys do? What's your strategy?
Look, our main activities are we are designing advanced fuels that will work in the existing reactors as well as the new coming small ones.
We're talking nuclear
fuel. So fuel you put inside the reactors won't work without it, but this is a reimagined, for the first time, new, better fuel for the reactors. We're partnering with Idaho National Laboratory to develop and test it, and this will improve the safety of the reactors and the economics of the reactors dramatically, as well as the non-proliferation, and can allow reactors to load follow with renewables on a zero carbon grid.
How safe can they be? I just got finished watching Chernobyl, which is terrifying. And I know I'm one of the last people to watch it. But before that, I watched Inside Bill Gates' Brain. And I thought it was really a fantastic sell for the nuclear industry. He seems to have found a very safe solution to creating nuclear energy.
Right. What's happening now is companies like TerraPower, that Bill Gates is the chairman of, and Lightbridge, our company, are developing newer, much safer technologies that literally, physically cannot have an accident like Chernobyl. These are very different, extremely safer technologies. The Lightbridge fuel runs 1,000 degrees Celsius cooler in reactors than the current fuel, and actually will produce more power while doing it, and just extremely safe.
Seth, reset kind of the world energy grid for us. Where is nuclear power today in the U.S. and then maybe in other parts of the world? Is it on the ascendancy, or is it still facing a lot of headwinds?
It's on the ascendancy. The polling in most countries shows nuclear has about 2/3 favorable or strongly favorable support, and the people who work in nuclear don't believe that. And that we're seeing new nuclear reactors being finished in Georgia in the United States, ordered in many countries. We're seeing rapid development of these small reactors, advanced fuel like what Lightbridge is doing. And it's partly for climate reasons, but I think the stronger driver right now is energy security. Countries that either want to get off relying on Putin's fossil fuels, or it turns out whoever supplies them with fossil fuels, they tend not to trust. And being able to get off that is a good thing. And you just mentioned the 1% increase in oil prices that will translate to about 1% price increase in a lot of expenses, including gasoline. That doesn't happen in nuclear. It's very level pricing. A 1% increase in uranium price would result in a tiny, tiny fraction of 1% of increase in a nuclear power price.
But it's the startup costs that are what terrifies everyone, right?
Yes and no.
In terms of the finances.
If you're building one or two, yes. If you're building four, by the time you get to the third one, those issues are done. The United States built over 100 large reactors, most of them on schedule, on budget. The United Arab Emirates just built 4, pretty much on schedule, on budget. China is, Russia is, France built almost 60 of them on schedule, on budget. So yes, it's like building a bridge. If it's a one-of-a-kind thing, the engineering, the complex construction can go over. But you build several of them, that's not the case. And with these small reactors, where much of them will be factory built, you could build them like 737s, very large numbers, and really know the timeframes and costs.
Talk to us about those smaller reactors. I guess I've heard about them just over the last several years. Tell me, what are they, how are they different, and what's kind of their purpose?
Well, right now, the typical nuclear reactor is 1,000 megawatts electric power. Small reactors under the U.S. government definition are 300 megawatts or smaller, and some go way smaller than that. So say less than a third the size of the current reactors to even much smaller than that. So first of all, you could get them small enough that you could have dedicated power to critical facilities like military bases, data centers, oil refineries, etc. So if someone shuts down the electric grid, you don't lose the military base, etc. Another factor is that because so much of them are factory built and shipped to the site, you have very good quality control, can build them much cheaper, much faster, and they're just using more advanced, more modern technology on safety, so that even with situations like you've seen where a reactor will lose coolant water, that kind of thing, these reactors could not harm anybody. Literally, it looks like even if they lived across the street from the plant.
Are we building them in the U.S. now?
We are going to soon. NewScale is working with Idaho National Laboratory to deploy one at Idaho National Laboratory. The company you mentioned, TerraPower, with Bill Gates, is looking at deploying at least one in Wyoming. X-Energy is looking at deploying in Texas to power Dow chemical plants, and there are several others that are looking at near term, and probably the first will actually be nearby, GE Hitachi deploying one at Ontario Power Generation in Canada.
Okay. So I know the Nuclear Energy Policy Summit is in New York this week. What's the number one issue?
Yeah, and I was pleased to speak there yesterday, and the number one issue there, I'd say, ostensibly is climate change, and that's what John Kerry spoke about in his keynote yesterday as part of Climate Week. But with President Zelensky about to arrive here in New York and speak at some events here too, I think energy security is really dominating, and we're hearing more and more about that at the conference too, not just climate.
I wonder when everybody started adding a second U to the word nuclear. Have you noticed that?
Yeah.
Even George Bush says nuclear.
Yeah.
Where's that come from?
Well, I think it came from George Bush originally, but it kind of stuck. So it's an American thing. I don't hear that in other countries.
All right, Seth, thanks so much for joining us. Seth Grae, President and Chief Executive Officer of Lightbridge Corporation. LTBR is the ticker to load into your Bloomberg terminal.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app, or listen on demand wherever you get your podcasts.
There's just a lot of folks out there doing some really good work about just alternative energies in general. One of them is Jonathan Maxwell. He's the CEO and co-founder of Sustainable Development Capital, and he has got a new book out. See, right here, got a new book out, The Edge: How Competition for Resources is Pushing the World and Its Climate to the Brink, and what we can do about it. Jonathan, thanks so much for joining us here on our Bloomberg Interactive Brokers studio. What's the big message for you when you're getting, you hear it's Climate Week in New York, it's United Nations General Assembly. I gotta think energy, given what's happening in the world, is front and center. What's the message you bring to your clients?
So, some people might say the clean energy transition or sustainability isn't going so well.
Okay.
Right? Most 82% of the world is still oil, gas, and coal in terms of its energy. So the message I bring is that not only do we need to figure out, which is the mainstream piece, how to get more clean energy into the system, but we've got to figure out how we can start wasting 2/3 to 3/4 of the energy in the system in the first place. So much of the gas and the oil
We've
is
talked
lost.
to you before, right?
Yeah, because the inefficiencies.
This one stuck
the
with me.
inefficiencies is your thing, right?
This is it.
Exactly.
Yes.
Inefficiency is my thing because the world wastes 75% of its energy, half of the food and 1/3 of the water.
Is there a cool scientific term for energy that's wasted in use?
It's energy losses of primary energy waste. Some of the best work in the world is done here in the United States by the Lawrence Livermore National Laboratory. They run an energy flow chart. You show how much energy comes into the US economy, how much survives on the other side. You lose about 2/3 of the energy, and it's mostly heat. So you talked about nuclear power stations. It's great producing power from a nuke power plant, but if you're dumping the heat, then it's only operating at 38% efficiency. If you've got a gas turbine, which is driving electricity onto the grid and it's dumping the heat, it's delivering 40 to 50% efficiency.
But at least the nuclear isn't creating a carbon footprint, right?
But you're wasting the heat. And so
yes,
you don't
but
need
I understand. But the thing is, other energy sources create carbon dioxide, which contributes to global warming, right? As we are told. I don't care if nuclear dumps 95% of its energy as long as it doesn't contribute to global warming, right?
Yeah, so there are three things and one dimension additional to think about. So the first is carbon. That's a really important thing to solve for. The second is cost. How much does it actually cost, total life cycle? And actually saving energy is the cheapest possible way, especially if you're dumping 2/3 of it. The third is resilience and availability. And that brings us into the last point. Like how reliable. Nuclear is very reliable when you put it on the grid. It can run what they call baseload. But the problem is how long. So here's the last point, time. So we all talk about transitioning the energy system, but it's going to take decades and trillions of dollars, and we're going to do it. And that's what Janet Yellen is talking about tomorrow at the UN General Assembly, and we celebrate that. What I'm saying is, in the meantime, it's just as important, and it can be done, if not to waste the energy in the meantime. And that's what's happening
What is the most
today.
efficient source of energy for running our homes and businesses and cars?
So the most efficient source of energy for running cars is electricity. It's about 75% efficient compared to about 15 to 30%.
Well, but that
efficient.
electricity comes from many different sources of energy, right? It could come from nuclear, it could come from dirty coal.
So, a most efficient way of generating energy for electricity is if you can use the heat as well as producing the electricity. So cogeneration using waste gases, natural gas even, but as long as you're using the heat. Nuclear, as long as you're using the heat.
So nuclear with a turbocharger, essentially.
Nuclear with a heat recovery system, and then using that heat. And then industry needs a tremendous amount of heat as well as power. And the last point I'd make is we always talk about energy as if it's electricity. Do you know how much of the world's energy is electricity? 20%.
Wow.
What's
the rest?
It's heat and transport fuel. So here we are in the United States. The United States loses 78% of the primary energy, in other words, the oil that goes into transport. That's
Someone told us yesterday, Paul, that the growth in demand for electricity over the last 20 years, or the growth in production, has been zero, which I thought was fascinating. I would have imagined it's exponentially larger.
Well, actually, do you know what's interesting? If you look at where electricity ends up, it ends up in the home largely. So our homes are very significant users of energy. Business and industry to some extent, almost nothing in transport yet, right? So if you then put everything into the energy system, the big piece is we've got a big problem with heat and transport. That's the piece that needs to be solved. 75% of all of this energy solution is addressable through making more efficient solutions for buildings, industry, and transport. Generate energy where you need it, so you don't waste the heat.
Now, when you say heat, are you talking about HVAC just in general?
I'm talking about HVAC, I'm talking about high temperature process heat. I'm talking about
cooling as well.
Cooling, steel mills, cement plants, very high temperature heat, cooling. There's more growth in demand for cooling by 2030 than the whole demand for energy in China and India put together. Data centers, massive. Public buildings. In the country I come from my funny accent, UK, 14% of the UK's energy is used by the public sector. The biggest part of it is the hospitals. And they use, again, as much heating and cooling as they do electricity, and they waste most of it.
What are some of the technologies that you've seen or that you're funding that go to this energy waste issue?
You mean
or
recovery?
Recovery.
Yeah,
yes.
So recovering things that would otherwise be wasted. So you can generate natural gas even. You use your natural gas on site, but if you're on site, you can use the heat for power. Sorry, the heat for heating. If you're taking a blast furnace, you can take, which we do, we take the waste gases from the blast furnace and recycle them into power and steam for steel mills. You can put solar on your rooftop, not just at home, but at massive scale in commercial industrial applications. And there's almost no transmission and distribution loss. And you can match your loads well if you pair it up with batteries. You can do heat efficiently by putting heat pumps in industrial applications. I've been doing this job for 15, 16 years of on-site energy generation. The biggest innovation I was dealing with 11, 12 years ago was the LED light bulb. All of a sudden, you could save 90% of the energy with an asset that worked 20 times longer. But on-site energy generation is a massive part of the solution. By the way, if we don't stop wasting all of this energy, I'm afraid there's no point making all the new stuff, however green it is, if we're just dumping the existing energy network down.
Well, don't tell anybody that,
No, we have to do both.
Yeah,
we have to go as fast as possible in generating clean energy, and at the same time, but to the same level of effort and the same level of investment, we have to invest in efficiencies and improvement.
Is that happening? It's
just starting. I have to celebrate the United States on this one compared to my country at the moment. The United States, about 20% of the Inflation Reduction Act is designated for things I would broadly define as on-site generation or efficiency. The European Commission has a massive policy called energy efficiency first. That's because if you remember when Russia last invaded Ukraine, when they annexed Crimea, the Europeans came out and said, well, for every unit of gas we don't use is 2.5 we don't need to buy from Russia. So ever since then, although they mumbled it until last year, the European Commission have been quite serious about energy efficiency. It's now the #1 policy. The UK needs to get serious. Today, there is actually finally a message from the Chancellor looking at ways of addressing this. But this is the largest, fastest, cheapest source of greenhouse gas emissions, the biggest way of cutting costs in the economy. And the great news is I'm not here talking about begging for subsidies. I'm talking about getting something done that's good for business, good for the economy. Actually, I think it's the greatest economic opportunity that I know.
All right, Jonathan, great stuff. I knew once you started talking, I know this guy. Jonathan Maxwell, CEO and co-founder of Sustainable Development Capital.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg Radio, the TuneIn app, Bloomberg.com, and the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Not surprisingly, climate change and natural disasters are really at the forefront of concerns among corporate executives, and we want to get a handle on that. So we check in with Pat Gallagher. He's the CEO of Gallagher Insurance. It is on the New York Stock Exchange listed company. AJG is the ticker. It is a $50 billion market cap company. The stock's up 24.5% year to date. It's a 52-week high. And it's up 0.7% today. Pat, thanks so much for joining us here. I know you guys recently conducted a survey of 1,000 U.S. business owners to understand kind of how they're thinking about risk. What are some of the key takeaways you found?
Well, first of all, it is no surprise that the business owners are incredibly concerned about climate change and weather-related issues. And so when you think about what's happened just in the past week or two, with Lee coming up the East Coast, we kind of escaped a major hit, but those things continue to rack the business community. In fact, I think we estimate that first half of the year caused about $138 billion of losses. And if you're a business person, that's a lot of businesses being impacted. That's a lot of homes being impacted by natural disasters. So that really is one of the main concerns of business people. We interviewed about 1,000 clients, all of them privately owned. So this is not the professional risk management community. These are the people day in and day out that make a living by running businesses. And they are concerned about their risk management needs, which they should be.
I wonder if there's a difference. Well, they're concerned, but are they doing anything about it? Is there anything they can do about it?
Yes, there is. And that's, I think, a really good point. The fact is that there's a lot they can do about it. And risk management and the ability to counsel with them and to give them some advice is a huge part of what we're all about. Insurance is just really one piece of what we do for a client. And in fact, we start with that premise that insurance plays a role in your risk management, but your risk management is not just we buy insurance. And it should be, what can we do? Where do we locate plants? Where do we move trucks? How do we react when a storm is coming? What is our disaster recovery planning? We help on all of that. So when something happens that's really a major disaster, how do we get you back up in business as quickly as possible? Insurance plays a role in all of that, but it's not the be all and end all.
All right. So from the insurance perspective, I mean, it's interesting, Pat. I see a lot of companies relocating to. It seems like everybody's and their brothers going down to Florida, but boy, it'd be a tough place to base a business given all the challenges they're facing from, all the weather issues down there. What are you seeing when you talk to some of these smaller, mid-sized businesses about kind of how they really try to incorporate that into kind of their future?
Well, first of all, I think it's really important to note that not all the mid-sized businesses across America are moving to Florida, and they're not moving to Texas. They're in business because the communities they're in need them, whether they're construction companies or real estate owners, or whether they're food companies, whatever it is, they're in locations because there's business opportunities there. So first of all, you got to start with the premise that not all companies either have the same exposures or the same way to mitigate those exposures. You have to really personalize this. And you have to sit down with a client and understand, where are they operating? What business is it in? We happen to be privileged to be very, very expert at about 30 to 50 areas of business. So take hotels or take real estate or religious and not-for-profit or construction. In these areas, we really know that business. So we can sit down, and it's a different set of exposures for the person that has to be a contractor in Naples versus the person who's a contractor or real estate owner in Chicago. And these businesses are literally global, but they're across, the interviewed businesses were across the United States. And you start with saying, okay, what are your exposures? No two businesses are exactly the same, and no two business owners have the exact same appetite for risk. I'll give you an example. I can take a large auto dealer in the town that I live in, Glenview, Illinois, on one side of town, and have a large auto dealer on the other side of town owned by different families. Those families will have a different appetite for risk. How much of the lot exposure for hail does one want to take versus the other? And you have to sit down with the owner and say, all right, what is your personal balance sheet? What is your appetite? How do we mitigate that? What do you do when you see a storm coming? What is the coverage that you need to take care of that open lot? How much are you going to have out there? How much are you going to be able to move indoors, et cetera, et cetera? And that varies across industries and it varies across geographies. And that's the starting point for someone like Gallagher, who then says at the end point, now let's buy this insurance to cover the things that you can't mitigate. And I think that's a really important function that a lot of people don't understand about the responsibility that the brokers have for their commercial clients.
By the way, in terms of Gallagher, can you keep premium increases across coverage, across geography, in line with inflation? I know we've been doing some stories about, for example, automotive insurance rising double digits every month for the past 12. So the inflation is there. But everywhere else, I mean, your cost to repair or replace is going to be higher with inflation. So do you see the increases in premiums as well? Do you have that pricing power?
Well, no, we don't have pricing power because, recall, we are brokers. We take no risk. So our job is to help that insured figure out, number one, how to mitigate their own risk, and then number two, how to properly buy insurance. And that means that in order to keep that pricing or to keep that cost at the level that it should, how much should they retain? How much of a deductible should they have? So let me put it in personal line standards. Do you want to take a $500 deductible on your personal lines or a $5,000 deductible? Well, different people will take different amounts, and that has a direct impact on the cost of your personal lines, whether it's your auto insurance or your homeowners. Same is true in business. So if you have the personal balance sheet to be able to take more risk, you can mitigate the cost of the premium that you're going to pay to a third party. And we're very, very good at that, whether it be putting together group captives, whether it be putting together self-insurance programs, or whether it simply be saying, look, the best place for you to get your insurance is this first dollar policy written by XYZ insurance company. But we don't actually have pricing power. Our job is to help that person who doesn't live day in and day out in the market get the best deal. And right now, you're absolutely right. the cost of insuring people is terrifically impacted by inflation.
And so is inflation, is the rates insurance companies can charge, is that relegated by the state? Is that regulated by the state? And so therefore you have to work with the state?
So it depends on the line of coverage, and it depends on the state. So in most states, personal lines, in particular automobile rates, are regulated.
Okay.
And you see a conflict going on right now that I think most of your listeners will be aware of in the state of California. A lot of companies have said, look, enough, we're not going to write here. And part of that is the loss picture, the wildfires and the hurt, the threats that they have just in terms of those. But a lot of it also is simply saying, look, we have inflation. The cost to repair is significant. We need to file for rate increases. We need to base rate change in order to cover these costs. Where you have a political system that makes that difficult to do, you finally have a break point in California where some carriers have said, I just can't write anymore here. And that's a real problem politically. And it is on those lines of coverage that everybody has to buy. Now, when you leave that and you go to a commercial concern, then you do have some lines of coverage that are regulated, but you also have a pressure release valve we refer to as the excess and surplus market. And that allows insurance to be quoted on a free form, free to rate. So that allows me to sit with a commercial client and say, don't buy that from the regulated entity. Let me structure this for you differently.
Got it.
But so it's the answer to your question is yes, there's a heavy dose of regulation. It varies by geography. It varies by line of coverage.
All right, Pat. Great stuff as always. Pat Gallagher. He's the CEO of Gallagher Insurance. But that's a tough business for me to really understand. It always has been. But fortunately, there are people out there who kind of get it. Gallagher Insurance, that's a New York Stock Exchange listed company. AJG is the ticker symbol. You can load that in the Bloomberg terminal.
You're listening to The Tape, Cantor Live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app, or listen on demand wherever you get your podcasts.
All right, we got Joe Mysak in studio, but it's not Friday. So why is Joe Mysak, who covers all the municipal bond stuff for Bloomberg News, why is he in there? Because he wrote a Businessweek column, a story that went back to his work on a little book, this little addition he had to this book called The Bonfire of the Vanities. And if you haven't read it, go back. It is the definitive Wall Street book of the great decade that was the 1980s. Bonfire of the Vanities.
I don't know about that, dude. Liar's
Absolutely.
Poker?
That came after. And Liar's Poker is very good, and that's also a great one.
Barbarians at the Gate?
Also a great one. That came after. Tom Wolfe, author of Bonfire of the Vanities. And Joe actually kind of was part of that. Joe Mysak, tell us about kind of what small part you played in working with or helping Tom Wolfe, the author of Bonfire of the Vanities.
Oh, that was a pricing business. At one point, Sherman McCoy, the star bond salesman, is working on a transaction, and I was looking at the galleys, and there was a reference there, and instead of referring to the coupon and maturity, there was a reference to maturity. And it's like, what about those 13s? What about those 13 years? And I said, I called Tom up and I said, I think what they do is really talk about the coupon and the maturity here, like the 10s to 36 or something like that. And he said, okay, what would it be? I said, all right, smart guy. I had to go get the Monroe calculator out. And we kind of backed into it, and it's the 10/10s of whatever.
So you're helping Tom Wolfe with a little bond.
By the way, those rates, that's a throwback already.
Yes.
10%?
Yes, exactly.
Nice.
United Fragrance.
So again, big book there on Wall Street in the 80s. Tom Wolfe, there's a film coming out about him, isn't there?
Yes, there is. Radical Wolf by Richard Dewey. And it is a documentary about Tom Wolfe. And it's funny, Michael, it's based on a Michael Lewis article in Vanity Fair back in 2015. And Michael Lewis went to the New York Public Library where Tom Wolfe had sold his papers and kind of dove in and look around a little bit and wrote about it, and then wrote about going out and seeing Tom Wolfe in Southampton. and it's just a fascinating piece of work. And Dewey points out, well, actually Lewis points out that Wolf really became quite a performer, and Dewey points out that he accumulated 150 hours of film, not including interviews he performed, and more than 3,000 still photos. So you could see Tom loved the camera.
Yeah, and Tom Wolfe became a player himself. Just all
yeah.
around the Hamptons, New York City, all that kind of stuff.
Yes, indeed.
Well, I will never forget reading the electric Kool-Aid acid tests.
Yep.
That was like my first foray into the world of the Grateful Dead and kind of the Hells Angels. And I think that's probably the book that made him initially famous, right? But then he had so many hits after that. He wrote The Right Stuff, which became a movie. Obviously, Bonfire of the Vanities became a movie as well. He must be one of the biggest, most successful American authors.
Well, I would say that he was certainly probably the most interviewed and photographed of American writers, and that includes Hemingway and Mark Twain.
Gore Vidal.
So you actually went to this vault, right, in the New York Public Library?
Oh.
And what were you looking for?
I was looking for this, for the origin of the quote. There's a quote in the Bonfire of the Vanities, and Sherman McCoy's little daughter Campbell.
Sherman McCoy's a bond trader.
Right? Bond salesman. Campbell McCoy says, "Daddy, what do you do?" And, she's like 6, I think, or 7. And I go, "Daddy, Willie, what do you do?" And he's fumbling around, and all of a sudden his wife Judy says, "No, I got this." And she says, "Well, Daddy, what Daddy does is he slices the cake and he hands it out and to different people, and Daddy gets to keep the crumbs." So Sherman is humiliated, and later on they're like, "Crumbs? Well,"
because he thinks he's the master of the universe,
master of the universe.
No, he's just
Great
handing out
salesman.
crumbs.
So I was in search of this quote, and I remember Tom Wolfe told me over dinner at Ben Benson's. I asked him about it. I said, "Who came up with that?" It was a very felicitous way of describing what bond salesmen do. And he said Desmond Fitzgerald. And I wanted, I tucked that away. And then last year I was searching around to write a column, and I said, "Gee, I wonder if I could find this in the Tom Wolfe papers." And I didn't find that, but I found something else.
What was it?
Well, Sherman McCoy begins as a writer. The series in Rolling Stone, goes on for like 27 episodes or 24 episodes. And Sherman McCoy's a writer of, and his famous book is called A Man in Slices. And of course, later on, he writes a novel. Tom Wolfe writes a novel called A Man in Full. Anyway, A Man in Slices. So I'm looking through Tom Wolfe's papers, and in February of 1984, the headmaster of his school, St. Christopher's in Richmond,
yep, know it well,
writes him a letter and says, "Hey, now Tom Wolfe had been, as you pointed out, already a successful author. He had been a trustee for St. Christopher's for about 10 years. So
he said, get in touch with a certain.
So he wants. So George McVeigh, who's the headmaster, says, "Could you get in touch with this guy Kirk Materne, who is then at Lazard Frere, because he just gave us a very nice contribution, and we're ramping up our endowment fundraising." Okay, great. Tom does. Now Tom is already writing Bonfire of the Vanities, but he writes a very nice letter to Kirk Materne. Kirk Materne sends back a letter on the Lazard stationery saying, "Wow, it was so nice of you to write me. Thank you so much." And, discusses their various lives and how they've, what they do, and invites Tom to lunch at 21.
Yeah,
the now shuttered 21. He and about 5 other guys.
Wall
and he
Street
says,
guys.
Wall Street guy says, I'm not going to put you on a podium. It's just an informal lunch. So Tom goes, has this fabulous time, writes to Matern, like, wow, your friends were terrific. And they introduced me to this place that, I couldn't imagine.
This whole world of Wall Street and
whole
trading.
world of Wall Street.
And so therefore, I'm going to change Sherman McCoy from a writer to a bond
banker
sales.
and a bond salesman,
Nice.
and just and I saw this. It was taking place, and the papers themselves they're organized, but not tremendously so. So you really have to, what's going on here? Oh, here's another letter from Kirk Matern, and it's setting up appointments for Tom, including the Treasury auction at, I want to say, Salomon Brothers.
Sure,
Wow.
the biggest bond desk on the floor. And as an aside, I worked for Kirk Matern at Payne Weber, my first job.
Nice.
Part of the rotation. So it all comes full circle. And he had me, I did my first bond trade at the behest of Mr.
Do you think
Matern.
your kids are going to appreciate, the historical stuff that, like, people that you rubbed elbows
of
with?
course
and
not.
all
Now
that?
they have no idea Wall
Have
Street.
your
Oh, come
kids
on,
read
sure they
Bonfire of
will.
the Vanities
No,
or
please,
Liar's
no.
They
Path or
will.
Sever?
Nah, they're creating their own history. They could care less about what I did.
You're listening to The Tape. Catch our live program, Bloomberg Markets, weekdays at 10 a.m. Eastern on Bloomberg Radio, the TuneIn app, Bloomberg.com, and the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
I am excited to talk to Werner Hoyer, who's just come into the studio here. He is the president of the European Investment Bank, which is one of the biggest extra-national, supranational lenders in the world. They are the development arm of the European Union.
Got it. Thank you.
And so, Werner, thanks so much for joining us. You invest, for example, I imagine you finance the EU's green transition, as well as, I wonder, do you have an interest in financing the defense industry of the European Union?
Not really. We do quite a bit when it comes to dual use activities and technology promotion, but we are not directly involved into arms and ammunition.
I'm just, because of the Russian invasion of Ukraine,
Yes.
and we have Zelensky here.
We are very highly engaged in Ukraine. There's two reasons. Number one, we are, of course, active in Ukraine since the independence of Ukraine. But in 2014, we did a step change because I said at that time, guys, this guy is not going to stop in Crimea. So this will go on. And then we stopped our business in Russia and diverted the funds which were available for Russia to the neighboring countries, to Moldova, Georgia, in particular to Ukraine. So when the war started, we were already there and we could beef up our activities there.
So what kind of activities are those? What are you investing in there? And I guess you take equity stakes, you lend money, you have a number of different transmission mechanisms.
We are a project financier, so we invest into concrete projects, and sometimes we are a little bit diverted because we see the military needs and all these things, but it's also an absolute necessity to keep the economy running, and the Ukrainians are doing a fantastic job under the circumstances under which they live, and that means the infrastructure must work. If you want to keep the economy rolling, your bridges, your railroads, your public transportation systems must work. And this is the key area of our activities. Also the health sector, which is vital in the best sense of the word. So we are very active in this field as well. Just restored or financed the restoration of the destroyed hospital in Odessa. So these are very important projects.
The eventual reconstruction in Ukraine, how do you envision the role of the European Investment Bank?
Well, I think as far as the European Union will be involved, we'll have to be involved quite a bit as well. And probably we are, in a certain way, in the lead. On the other hand, what I insist on now is there is no possibility, no responsible possibility to wait for the end of the military confrontation before you begin with your reconstruction. Because what is needed now is keep the economy rolling, keep the tax revenues coming in, keep the agricultural sector being able to export, and not overlooking the fact that Ukraine is also a very interesting partner country for industry. So these support measures for Ukraine must take place now, and not once one day, hopefully, the ink under a peace treaty is dry.
How is the EIB financed? Do you sell bonds or?
We sell bonds. We are selling between 70 and 100 billion euros EIB bonds per year. A considerable part of them, by the way, green bonds nowadays. We were the pioneers in the issuing of green bonds. And so this is the basis of what we are doing. The capital endowment of the bank is big, but in comparison to our lending, ridiculous. We have never seen more than 25 billion euros in cash from our shareholders, but we have a portfolio of almost 600 billion euros. So the leverage effect is enormous, and that is due to the trust of the capital markets in the bank and its technical experience. We are an engineering bank, a bank that is endowed with fantastic people from science and technology, and this makes sure for the investors who give us their money that we invest into bankable but also technologically doable projects.
By the way, the EIB was one of the first, I guess, supranational organizations to, I'm pretty sure, and correct me if I'm wrong, Werner, to issue a bond on the blockchain or to issue a digital bond in essence.
Yes, we are always trying to pioneer in these fields, and it's fascinating when we issued the first green bonds and made sure that what's labeled green is green and there is no green cheating or something like this. I think we were considered lunatic, and now this market is $1 trillion heavy.
Well, what is, I know you guys were first with the green bonds, what is that market conditions like today?
Well, it is, the market's partners are very, very interested in this because it serves their own sustainability, not only image, but reality. And nowadays, everybody who invests into anything in Europe must be in line with these principles.
In terms of the IRA, I mean, a lot of Europeans were unhappy about the kind of subsidizing and almost protectionist, I guess you could use that word, bent, of this legislation. Do you have an answer to that in Europe?
Well, the mixed feelings. Number one, I'm happy that under President Biden, the U.S. has redetected climate change and sustainability. So this is very positive, and President Biden takes the entire economy along. On the other hand, I'm not naive when it comes to distortion of competition. Then it's something that affects us seriously. So we need to come to common terms with the United States of America. But I don't believe that a trade war is the brightest thing to do now. It's more about finding synergies and taking on the challenges together.
In fact, I was talking to Ola Kalenius yesterday, who was making similar statements, saying that we really need to support global trade as well in order to kind of lift all of the boats, right? Or to grow the pie.
I completely agree.
But right now the EU is looking into, I guess, ways, if I'm going to say it without kind of camouflaging it, to block the import of Chinese electric vehicles to Europe. Does that concern you?
Well, it would concern me if it would be so simple. I mean, Vice President Dombrovskis of the European Commission is right now on his way to China to come to reasonable terms with the Chinese. And I think there is, between Europe and the United States, but also between Europe and China, some commonality of interests. And we should go for that.
Because one of the things I know about, obviously, the economies of Germany and other large European economies is perhaps a very strong trade relationship with China. Where do you guys fit into that? How do you think about that?
Well, what we have learned from the terrible experience with the Ukraine war is that you better stay away from being too dependent on somebody. Whether it's on security from one partner, whether it's from trade from one partner, or when it's from the provision of critical raw materials from another one. So we have to diversify in every aspect, and that's, I think, the lesson we have learned.
I wonder about the green investment here in this country. ESG has become a negative term attached to any investment vehicle, but that's not the case in the rest of the world. And do you expect to make real returns on these investments, I guess, is the most important question, outside of the climate issue?
Well, for us, that's key. I mean, we are dependent totally on the financial markets, which give us their resources. They trust us. They trust us because they know we are engineers and scientists-driven bank. So we make sure that a project that goes through our due diligence is bankable, is technologically feasible, and then at the end of the day brings returns.
Lucrative.
And I think we should always, I mean, in view of the times where we talk about doomsday scenarios from morning to night, we tend more to the can-do approach and say, yes, if we develop the right technologies, and yes, we can do that, then we should be able to meet these challenges.
We were just talking about sustainable energy with somebody who runs a nuclear fuel company. And I know a lot of people consider nuclear power to be safe and clean now. That isn't really the view from Germany.
No, from Germany, it's a different view. I mean, politically, it's also a divided issue, and the same goes for the European Union. So as a bank that is dependent upon the support of its shareholders, which are totally split on this issue, I don't take my head out. The statutes of the bank do not keep us from financing these things. In reality, we have never done it. What we have done instead a lot is investing into safety, security, and into dual-use opportunities.
Werner, just real quick, your successor, what can you tell us about a potential successor?
Well, I can only say one thing. I leave the bank with a very, very good feeling after 12 years. My mandate is running out. The member states have proposed 5 outstanding candidates. I'm very proud that we have brought the bank to a place where people of this caliber are interested in taking the lead.
Do you think there needs to be a woman president?
That would be wonderful, but of course we have not beautiful, but perfectly excellent gentlemen in the race as well, so I don't take any side.
How about a liberal in the European sense? I know Lindner said he wants continuity, and you're an FDP guy.
Liberals are always good people.
All right, Werner Hoyer, thanks so much. Werner Hoyer, President, European Investment Bank.
Thanks for listening to the Bloomberg Markets Podcast. You can subscribe and listen to interviews at Apple Podcasts or whatever podcast platform you prefer. I'm Matt Miller. I'm on Twitter at MattMiller1973.
And I'm Paul Sweeney. I'm on Twitter at PT Sweeney. Before the podcast, you can always catch us worldwide at Bloomberg Radio.